In Canada, we've been very lucky with markets. We have the resources, we have water, we have oil, and we've seen those do very well. The Canadian markets have climbed to new levels with gold trading at above $1,400 an ounce. We've seen wheat soar, we've seen oil soar. But where should you invest? We've heard rare earths in China, where they're limiting the sale of the export of rare earths. Should you invest in China? Should you invest in Europe? Should you invest in Greece, which is having problems? Really, the answer is we've got to look south of the border. Our Canadian dollar now is at a premium to the US dollar. We can buy stocks cheaper than we could in the last decade. There are opportunities there. Inflation is a concern for the future, and certainly with the amount of money in the system and the turnover of those funds, we are going to see an inflationary scare, but food prices are starting to cause concern globally. We're starting to see riots in Egypt where there are 30% unemployment for people under 25. We're seeing riots in Tunisia. Food is an everyday expense. The markets that we want to invest in, whether it be the breadbasket of the world in Canada and North America, with flooding in Australia, food prices become very expensive. What should we look at? What should we invest in? Most of the Canadian markets, because they're resource-based, have climbed to levels which are too high. In the United States, with the turn in the market, we're starting to see companies come up and have good value, and they're relatively cheap. You don't want to invest in the company that's quadrupling its earnings. What you want to do is take a look at stocks that haven't yet seen the focus of the media. And for those situations, you've got to think outside of the box. And that's an important thing that we do here, is we look at companies that have turnaround possibilities, yet are cheap enough so that if there is a market correction, that they'll hold their value. Whereas stocks that have quadrupled in value can very easily lose 20-30% of that value.